All right, folks, it's the guy with the bow tie checking in with you live for another edition of Business with Benefits. Sorry, we had a tech challenge between my microphone not working and Benji's sound not working. We had to reset a few times,
Yes,
but
sir.
the show must go on.
Absolutely.
So, Team Live, if you were, let us know where you are, put Team Live hashtag, and then what state you're located in or city. And then Team Replay, thank you for joining us whenever you watch this. Today, we're kind of talking about business credit and these SBA loans with everything happening with economic injury. Benji and I have a lot in common. We went to the same college, undergrad. We're both a member of Kappa Alpha Psi Fraternity Incorporated, and we both have the same birthday. So it's a lot of check boxes. What was that first business you and I got into years ago when we were still in college?
What was that one? It was network marketing. Quitstar. I think that's
Quitstar.
Yeah. Wow.
First got the entrepreneur bug back in, what was that, 2001 maybe?
2001. Yeah, that was around the time. We were trying to find anything to make something happen. Broke college students, right? But that was It was a lot of learning that happened there, man.
Yeah, I can't remember the name of the gentleman that mentored George something, but
George Halsey. I think they have like some memorabilia and some statues of some sort, like in Greensboro for him now.
Oh, perfect. Okay.
Yeah, that was a couple years ago. Well, I won't say now. A couple years ago, maybe 5, 6, maybe close to 10 years. So it's been a while, unfortunately, but yeah, the family's still going strong. I know we stayed connected at one point, but yeah, super successful family legacy. We learned that early.
Yeah,
I think that was super important. Just for that, exposure, right? Just kind of being exposed to something that was unfamiliar and proven, So I think I was talking to somebody about that, and I kind of equated it to, if you think about like people in customer service, if you can tell if they've ever waited tables before versus if they haven't. I kind of look at it like that. If you've had that experience, I think you're sensitive to people a little bit more. Just an opinion,
Yeah, I agree with that. It definitely taught me the entrepreneur bug and motivation. So I'm glad we're bringing it full circle. We're both in different careers and businesses right now. So with everything happening with COVID-19, there's obviously issues. So I want you to share with people why they should listen to you about business credit and loans.
Absolutely. Well, in the general sense, I've been in the industry now since 2009. I remember the previous recession, right, as we'll call it. At the time, I wasn't necessarily a business owner. I remember being entrepreneur at the time, and a lot of those hurdles. So I remember that very vividly, all those experiences, and I remember wanting to position myself so that I didn't have to encounter those things in the future. So around that time, we started the company, in really super humble beginnings. I worked with friends, family, frat, and just for free. Right, just and trying to improve their personal finances. Maybe they had a portfolio, maybe they had a few businesses, and I dabbled. Right, I kind of I hear a lot now, tasting a lot of industry. So I tasted early. I started early, so I had an opportunity to dabble. And so you have friends and family that will at least ask you questions. I had some successes, and really found that while working on those personal files, I started developing, I guess you call case studies, and started realizing that, yes, the credit repair process or even credit improvement, that is valid, but it's interesting when you take into the fact people, right? The process isn't unique, but we are, and I think that's what I started really kind of pulling back, or, the onion on it. And realized that a lot of us, or at least the audience that I wanted to cater to at the time, had entrepreneur tendencies. Maybe they weren't quite ready. Maybe they were still in a job. So a lot of those guys were coming my way because they had plans. And obviously, if you've been in business, if you study business, you realize that a lot of successes were started around those declines. So a lot of those businesses back then, now, apartment apps and all types of businesses, that they've become, at the time they were starting these things. And they were hurting themselves personally doing it.
Okay.
And didn't realize it, didn't know it, didn't know another way. Because when you think about getting access to capital, like I said, I think I was telling you earlier, talking to people in Facebook, they're having trouble getting approved for loans and not understanding why. And that's what my goal, I guess, ended up becoming. So I started doing a lot of studying, I became a broker.
Okay.
Wanted to actually provide those services and resources to just the people I knew, at least at the time. And then it started growing from there. So it was really organically in terms of how it grew. But I wanted to make sure that I wasn't one of those companies that only sold, right? Didn't educate, because I think when you get that denial letter, it gives you some generic information, but it doesn't really tell you how to improve upon a situation. And you can learn from those denials, obviously, right? And you can even learn from other denials or other people's denials. And I think that's kind of the point. So we pulled together a community. We designed software so that we can create a better user experience. So when I look at Credit Hub as a company itself, we are a tech company by trade, but we're really more into the human or customer experience. And so we happen to specialize in credit and finances, but wanting to bridge that gap. I didn't see a lot of education. I didn't see a lot of my peers doing those educational pieces. And I wanted to make sure that we had free resources. So I know there's a lot of information online. So if someone wanted to work on it themselves, they could, and then, kind of provide those blueprints for that. So, doing that for about 9 years. A lot of success. I would say on track now, we do about maybe 3 million in funding in terms of actual capital for businesses on a monthly basis. And been doing that for the last 3-4 years, exclusively, I guess, so yeah, it's fun. It's fun. Like I said, you get a chance to have a different vantage point and actually improve the business in their direct bottom line,
Okay. Well, let's break that down, because I know when you and I first started talking about your business credit and personal credit isn't something a lot of people understand. So kind of break down for people, what's the difference in business credit and personal credit and why it's important to separate the two.
Perfect. Nothing's wrong. Personal credit is well, first I'll start off this way. Business credit is actually technically older than even personal credit by algorithm, by score and reporting. Dun and Bradstreet was around long before First Isaac in terms of FICO. So order, business has been around longer. Consumer credit and consumer spending, that became a thing, later, right? So, truthfully, credit was never really, in my opinion, designed for business because of the major factors that affect personal credit report. Because even when you're improving a credit report, you can, in some cases, trick the algorithm by improving another portion of those percentages. So if you ever saw a pie chart where they'll break down the different scoring models and also what percentages go towards which improvements. So whether it be credit, whether it be new credit, or whether it be history, you can do a pretty sizable change to your credit report with only maybe affecting 40% of the algorithm. And I think I think the industry has been pretty successful in that regard, but never mistake that having the perfect score or having those scores leads automatically into business finance, because you can create a lot with a personal credit report that may not necessarily translate over to a personal report. I've denied 700 plus credit scores for business financing, and it's not because of their score. All right. Okay. And I guess to further kind of put a nail in that is, when you look at the different factors, one of the major ones that stood out to me was the utilization portion of it. So a lot of your score is based on credit card utilization. And that alone, I saw most people creating personal lines of credit and using it for business purposes. I get it. you know? And I know, especially when you have that idea in the very beginning, you think about those things, or you're not necessarily potentially thinking about those things. You're thinking about, I want to get this idea off the ground. If you saw a need for a new service or a new product, so you're thinking about more so those things, not so much if it doesn't work, because no entrepreneur thinks that their ideas are going to work, right?
Right.
Right. So yeah, they would use their personal credit, damage it profusely, and then of course now when you do that, you're in a situation where your idea, your business, your venture, now it has to win. And if it has to win, you almost potentially might as well have a loan. And I'll talk about loans and the difference between credit lines and loans, depending on where you are in your business, because I don't think that's talked about enough either. But so they'll use those personal funds for business purposes, put themselves in a bind personally, especially if they haven't already bought their home, or if they also have, desires for maybe different type of purchases, right? So that's the thing, is when their business finally grows up, so to speak, when they grow into what they want to become and their successes, that's usually when you see, I wish I would have separated.
Okay, that makes sense. Well, that brings an interesting point that Zach Lynch in V Groupies in Canada had a comment here. He actually said, in my experience, you have more success with private investors as opposed to banks. Would you agree with that a little bit?
I would wholeheartedly agree. And the major thing is that I don't have one product that I have to push. I'm not with a particular bank and I only have to sell this product. Right. And I think that's the power, right? So that way you can truly, well, first of all, you have an invested interest in their success, right? So you want them to win. You're not, because we don't charge any upfront fees. So we only win if we're all successful in that regard. So we have an ability, as a matter of fact, our arsenal of network of lenders and SBA lenders is phenomenal. Growing every day. And that's the point, so that we can have more resources. That's why we built the company, so that literally you have those resources when you needed them and help you improve, so that if you don't meet those criteria, what are those criteria? How do I get there so that I can get some of those larger sums?
Okay. And this is the reason I wanted to have you on, because the SBA, there's a lot of money in the stimulus package, and the SBA already had economic injury as a option for these loans before the stimulus package came out. So kind of for those that are in a bind right now and saying, hey, my cash flow's hurt, or I'm laying people off, or different things of that nature, kind of break down for them what this new economic injury loan means for them as an option.
Yes, man, I haven't seen anything like that before. And it's interesting how the money can be printed when we need it. It's that whole thing is interesting. So I won't do that as much as it's unprecedented what they've done. It hasn't necessarily happened before that I've seen. And mind you, the 50 billion, right, with a B, right, at the time that was just pumped in was actually a second stipend, I guess, if you will. They had already dumped another 50 billion prior to the pandemic, so there was already money there to be lent, and that was really what you thought was going to happen. But I looked at, based on last year's statistics, 80 million was on lent, so this is prior to that. So, they've always had these funds, but they aren't necessarily as quickly to lend. And obviously what you're seeing now with the new money being pumped in, they're having to try to cover some of those commercial paper or security notes, so that it'll entice lenders to actually provide more lending programs, right? So you could, they've had the money, but especially when interest rates drop, we know that lenders aren't making the money that they would want to make. And obviously, if you get this big fund dumped into it, you may want to stagger that out, because obviously rates won't always be zero, and you'll probably do majority of your lending when the rates recover. Right. So, because they're literally not making any money at 0%. And that's, so that's what happens. So with the government pumping more money into it, creating more liquidity, it makes the banks obviously a lot more, it makes them lend more. Right. But what ends up happening, so there's money out there now between the traditional SBA fund, between the obviously disaster fund, which is new and unprecedented. And
Yep.
always have had these micro loans too. So we can talk about all of those things in terms of how, how do I get access to that money, so to speak. So with those monies being pumped in and the liquidity being pumped in, you're going to see a lot more lending happen. But I think what you're going to see after that is, I'll start by saying this. I've already had people telling me that the websites crashed as they, try to.
Yeah.
Yeah,
it crashed early this week.
Right. So you're starting to see that. So it's a lot of information. There's a lot of people applying, and that's what's going to happen. Banks have the ability now with that type of activity to cherry pick.
Mm-hmm.
Right. And so you're going to see some of those processes getting slower. And if you think about it, SBA is not a bank, right? It's a it's a guideline. It's a set of rules, so to speak. So they're offered mainly by banks and obviously certain SBA providers. And so when you're looking at that as an option, banks still for SBA, and I can go over requirements for SBA, those are still the same. They haven't changed. You still need to have a combination of decent, perfect credit. You need to have revenue. You need to have 3 years tax returns. They need to be able to to locate that information, locate that money. They're also looking for collateral. So they're looking for what I like to call those 3 C's. Cash, collateral, and credit. And you have to have all those, including business credit, right, in order to actually qualify. And that's how traditional SBA has always been. Now with the disaster fund, that's the difference. These are the things that are probably, I think your audience will love the most to hear. Since knowing those things, right? SBA, you have to meet all those criteria. And as you apply for that information, it's not a lot of information, but as you apply, you'll get denied. Or that process may take a longer period of time. In that duration, obviously a lot can happen with your business, right? And you can still qualify for other money that's out there. There's a lot of money that's out there outside of SBA. I just want people to know the SBA and how to get and navigate through that, because there's a lot of brokers and a lot of institutions that are probably going to charge upfront fees. We're not, especially for the disaster fund. I just don't feel right about it. I think you and I were talking about this. I think people.
Yeah, break that down. I think it's important because I've heard brokers already tagging on points onto it. So kind of break down for people why you don't want to charge upfront fees in this crisis.
Yeah, you can, right? You can charge application fees. You can charge fees to actually process, and it's just, and I guess I'll say this too. I'm sad against anyone who does, right? I'm just suggesting that I won't necessarily practice in upfront fees and anything like that, because I think people are going to remember after this is all over who gouged, who didn't, who was helped, and who who may have just only been selling products. And that's the reason why I think I didn't even necessarily want to go in here to even talk about products as much as I just wanted to make sure they knew the information that was there, right? There are other programs outside of SBA. Especially depending on your industry, you're probably already noticing some things already tighten up in terms of lending, but there are a lot of programs that have it. And that's also another benefit of working with a broker, because there's always another program. So when I mentioned those 3 C's, cash, credit, or collateral, as long as you have one of those, and when I say those 3 C's, these are your strengths, right? I think every business has a strength. Obviously, the more strengths you have, the more business and capital you can acquire. So lean in on your strengths. If you have revenue right now, that's your strength. There are still revenue-based factoring companies that are doing a phenomenal job. Those are those fintech companies that you see a lot, just kind of flashing through Facebook, and the Blue Vines, the On Decks. So they're doing a lot in terms of revenue-based financing, but you're going to see that those things are going to tighten up because revenue's tightening up. And those are the easier ones to qualify for, right? Because you get those funds in 24, 48 hours, pretty fast. But now I'm starting to see my lenders ask for like weekly bank statements. And so they already know certain industries are on the decline. So unless you can show them the pivot, then there are, then the disaster fund is probably going to be a better fit for you, because you can actually use those types of monies for things like payroll, things like, paying off debt, things like that.
Okay.
Whereas traditional SBA, please don't tell them your revenues decline, and that's the last thing we want to hear.
And real quick, I'm gonna check in with the audience real quick. Marcello, my good friend, he said, "Whoa, no upfront fees." So he's happy with the no upfront fees. And then Carmen Hart-Zellman, Carmen from Fort Valley, we got the Fort Valley connection going.
Hey.
She said, "Totally agree. How people handle them to be brand defining." I think I saw Mark Cuban. The way companies handle their employees during this will define the brand for decades. So that's the reason I really wanted to bring this up, because when you mentioned payroll, a lot of companies are laying people off so they can get unemployment. But unemployment right now with this new stimulus package on the high end could be like $900 a week or so, but that's depending on your wage and everything. So a lot of these folks that are going to be put in the bind where they don't have money coming in, that company looks to look bad to them in the future for anybody wanting to work for them. So would you think that right now that small businesses should kind of focus on getting capital for keeping their staff and keeping the machine going, or something else you think?
Absolutely. Or innovation. I know it's hard to think about what innovation could look like in an environment, post this, and I won't even begin to speculate. But I do know is when looking at the market during the previous crisis, because when we look at things like this, the best way we can do is look at the past. And history was one of my favorite subjects. Looking at that information and looking at all those stats and anything you want to read on it, those that acted quickly were able to recover, because I know there's some industries that aren't necessarily being, impacted directly as much, right? Depending on where you are. But lines of credit, access to it is going to type, like I said, they're going to have the ability to cherry pick. They're going to have a flood of applications all the time, so you could go that route, and we're getting approvals, 30, 45 days, in terms of being able to get those turnarounds. But what we're doing is we're doing it a little differently. We're having them use a different method, more like, and this is what I coach my members on. We're using Express instead. Currently, I'll put this information out. Look up SBA Loan Express. The big deal here is going to be staying under a certain number, right? So remember we talked about collateral in terms of having, and collateral could be equipment, it could be commercial property, but it's most likely probably someone's residential home. And if you don't want to put those things on collateral, things you have to think about, right? Yeah. So if you look at SBA Express, you could actually stay under a certain number, 350,000, right? If you're under 350,000, you may not have to, and especially, I won't skip. So it's under 350,000, and you may or may not have to actually provide collateral. They'll only look at the first two C's, which means your credit and your revenue, right? And they're okay with. For the disaster fund, they're okay with declining revenue, but still with personal credit, you're still also looking at things like a clean history for the last 3 years. So not just I have an 800 score, but I just received it, or even I had a late payment or a delinquent account a year ago. Those things can actually still knock you out of those programs. And that's the reason why I want people to know that, yes, you're going to be applying, and yes, that's going to be a little wait time, but in the meantime, there's still other programs. And that's where you come to Credit Hub Access, and then we can at least get them pre-approved and check their eligibility, because we don't do credit checks, and we can actually find out if they and what they can qualify for pretty quick. That was our big deal. We wanted to make sure that we can give them all access to all the programs, all the financing that they can qualify for right now, right? Okay. And obviously, we can still work on SBA.
Okay, now that's an interesting question. Zach asked, how far do they stretch in terms of region? Is this only applicable for the U.S. and Canada? Because he's in Canada, so for your lending purposes, are you U.S. only? Can you help people out of the country? What's that broken down to?
Right, we are U.S. only. We are U.S. only. It's interesting though, because California, I think they just, or not California, Canada just had and I don't want to speculate, but I believe they just had a relief too. And I think when I look at Canada's size versus, I think that's where I got California from. They're pretty close in size, so they got a pretty decent stimulus package, if I'm not mistaken. Canada,
Okay.
Canada's doing pretty good. As far as U.S. goes, yeah, totally all U.S. based. And as a matter of fact, speaking of U.S., there are a lot of state-to-state programs that are actually doing a lot too. Like Georgia has already been approved for the disaster fund, and they're already lending money. They're doing things like microloans. You can do what they call a 7A SBA, right? And like I said, stay under a certain number. Like the microloans, you can do it for about 30,000. So you think about like the companies that may not make millions of dollars, right? But they're profitable, right? And they can show that. So you can go for a microloan, and you can find a lot of sources on Georgia.org. And as well as we work with a lot of them already. So and that was kind of the idea. We wanted to work with all the lenders that were credible and legitimate and provide those options for you.
Okay. Well, I think at one point I don't want to gloss over. You mentioned declining revenue. So some of these businesses this impact just hit this week. So they're not really in a bad space quite yet, but kind of break down why it's important if a loan looks at declining revenue and doesn't, because I think that's important for business owners to know when they're looking at loans.
Absolutely. Like, so the fintech world has exploded. And it's because of the simplicity in terms of how they were able to navigate those finances. They weren't having to necessarily speak to you, right? They use a third party that can actually verify the information in your bank account and revenue statements and that sort of thing. And then they can obviously produce a quote for you. So that was awesome, right? So and those programs were great because it didn't matter if you had a 500 credit score, right? It didn't matter. Didn't have collateral at all. It was strictly based on revenue. So that's factoring. It can also work on things like purchase orders. Like some of our programs are kind of subscription based, right? So those monthly payments can actually be used as collateral, right? So you have some of those companies that may not get paid for 6 months depending on what they sell, and obviously things a lot in transit with things not being able to be shipped. Probably some of those concerns. Those are how you can leverage those things. So future monies, you can actually leverage. Future contracts, you can leverage. You can also access things like 401k, where you're not actually pulling money out of your 401k as much as you're betting against it, so to speak. So that way, that money can still grow. It's still in your 401k, but you can actually leverage it that way. So they're starting to use, there are a lot more programs. So you can use stocks the exact same way, and you can leverage those things, and then obviously still have access to it without having to liquidate.
Okay, I didn't realize you can do all that with collateral. I mean, that's where some people kind of get messed up. Where like, I don't want to put my house up, I don't want to put my car up, and things of that nature. So I think it's good that they can use other assets, well, there are assets, but other types of assets for collateral.
Exactly.
Some of these like restaurants, we got to obviously talk about restaurants. They're being the most impacted by this. So what do you think is the best strategy to help these restaurants kind of survive? Because people aren't coming in. Most states have said no dining allowed. And also most restaurants doing Uber Eats and DoorDash and all that lose revenue because they're paying the commission. So what do you think is the best thing for these companies to kind of survive this?
And I want to be sensitive to this too, because I totally understand that every restaurant may not fit in the same category. But I would definitely first, before I even looked at financing, I would look at what the pivot could be. Is there a way to eliminate an expense? Some of the stuff goes back to, I call it old school training from your old grandma days, kind of just cut your expenses. What can we eliminate? McDonald's was awesome at this, where they streamlined their menu and only focus on obviously the more popular items and then carry everything. So this is a great time to kind of cut down on things that weren't as profitable and obviously focus on things that could and are, and then build support around that. So if that does mean financing, you can create a pivot around that. So if your revenue is declining, obviously, first of all, yes, you want to do it before the revenues decline. And if they are declining, I would go SBA. I would start looking at the SBA disaster fund first, because that's going to take some time to get approved for. But in the meantime, prior to your personal finances starting to be affected, you can actually start looking at that first seed with credit-based financing. There's a great program now with our Genesis program, and you can actually get qualified for unsecured business financing. Those are credit lines. Those aren't loans, right? So you're only paying interest technically on what you actually spend. That and unlike with SBA, you have to explain what you're going to do with the funds with SBA, right? Mm-hmm. With unsecured financing, you can use it how you see fit.
Okay.
And that's going to be, I think, the major difference. I think what a restaurant or anyone who's into that, into foot traffic business, I would definitely be looking at the pivot, and then also be looking at a line so that I can at least cover my payroll. Because like I said, I think people are going to remember these things. And obviously, if they can see the pivot and you haven't gone, and I don't want to simplify it or make it trivial, but if you haven't already adopted some variation of online version of yourself, then those are the things I think your clients are going to pay attention to, because they'll be able to see that you could have done X, and they want to at least attempt. But yeah,
when I was talking with Stacy DeMarco yesterday, she mentioned a restaurant that had closed down over here was selling the meat from the butcher with a markup. So they said, hey, we're not open now, but if you need chicken, steak, and things like that, we got you. So I thought that was interesting pivot.
A spot very similar to that. They were kind of out of chicken and pork, that kind of thing. So they were selling bison, they were selling lamb, they were selling all the things that no one else they would normally.
Pretty creative.
Normally, actually, to do it, But I see that a lot. That's what I think. That's what's happening. Some of the memes that are going across now with the alcohol company who win the hand sanitizer. I mean, those are the things that I clearly see that I think I think the clients of those businesses are wanting to see those things too.
Yep, absolutely. So SBA has all this extra money going around right now. So people are going on the website. Should they contact the broker first, or should they go to the website and kind of go through the application process first?
Well, in my experience, and this is, again, me wanting to not necessarily come across as the salesman, but I would encourage them to do their research. I would encourage them they can apply on their own for sure. I've learned that our company, or even the information I provide, becomes more valuable after you verify. Mm-hmm. So, not opposed to them, doing their own due diligence, but yes, if they are busy with their business and don't want to take focus away from that, then we can totally get them pre-approved for all those options without the credit check, and they can continue to work.
Okay. That way, and I think does it negatively affect them if they apply and they get denied? Like if they just go to the SBA.gov, fill it out, and they get declined, does that negatively affect them if they want to do something else later?
No, it doesn't necessarily negatively impact them. You may not necessarily get a lot of details on why it didn't work for you. So you may, you're just kind of getting generic information in terms of why you didn't apply or why you didn't get approved. Mm-hmm.
Okay, makes sense. Well, I want to be respectful of your time. I know we had the tech issue for a while, but I think we got some great content out for people to kind of know what to handle. So for people that, you have Credit Hub as the company page, what would you tell them as a party message for the audience for how to contact you or what things to pay attention to in the coming weeks?
Sure. Those that act on the capital that they need, and obviously where you are as far as business, get with whomever you feel comfortable at least talking about it. If you don't have an advisor, if you don't have a broker that can at least shop this information for you, then you can entertain more than one, right? You can actually compare rates. That's the idea, and I think you should. In our programs, we help the companies compete for your business, right? So I would say just act now. Don't wait. Don't linger, because I think the thing that I see the most is that this environment creates stagnation or kind of frustration. So sometimes frustration can immobilize a person. And that's my fear. And that's the reason why I wanted to hop on. I don't want people to be fearful. I want people to be optimistic, because there is money available in the market. The market is liquid. The market can support it. It's just there's a lot of people seeking those same funds. So position yourself.
Yep. And last comment, or last two comments actually. Carmen asks, not sure if I missed this part, but with collateral, if I put up my house or stocks or whatever, how do I protect them if the business fails? Again, I'm new to this, might be off topic, but that's a good question. So you put up your house, your stocks, whatever. how do you protect them in case the business fails?
Well, they're only going to leverage a percentage of what that collateral is. So it's not like 100% of it as well. So you're not losing the entire asset, but yes, that is definitely what you're taking the risk out on. That's also the reason why I suggest not taking out a lot of money. Take out what you actually need. Like I said, stay under that $350,000 mark. You can actually go under. That is a concern, and I think it's a valid concern. So I would say judge that accordingly, because if that is a major concern, there's other financing out there, and I wouldn't want to leverage that if that is your only asset. Given the timing that we're in, I wouldn't feel comfortable having that. Having that
linger.
Yeah, But so, and that's only simply because I know there's other monies out there, right? But that's what I would do. I would pay more attention, because as a matter of fact, last thing on, and it's not necessarily off topic, but I want to make sure I kind of put it. Some people put a lot of stock in the funding in terms of, hey, I got a lot of funding. Funding can give you a false sense of confidence in some cases, right? And I want people to be conscious of that, because you only need what you can actually use to accomplish it with, right? I'm actually not a big proponent of loans if you can help it. I love credit lines because because if you can keep the discipline, you can actually utilize it and actually continue to have that work for you. Whereas if you have a loan, you're seeing more of, you're on the hook for the entire amount, and now that idea has to succeed. So,
pay back the loan,
right? So I guess to further answer Carmen's question, if this is a brand new business for you, I don't know if I would necessarily go collateralized loan in the beginning, as much as I would look at what I could create from a simplistic, most valuable product or most viable product in terms of what I can do to get this from point A to point B in terms of concept or approved concept, or generate some initial revenue for it before I would actually seek capital for it.
Okay, got it.
Yeah.
And then if you do default, so let's say you put up half your 401k or half your stocks into this a loan. If the business did fail, you would have to owe back that 50% of that collateral. Is the understanding?
That is correct.
Okay, so credit lines are the way to go, definitely. And Zach said, do the research. Great tip. And Carmen said, got it. Thank you. So give people the webpage and the social media and all that good stuff so they know how to follow you and learn more.
Oh, yeah, absolutely. Credit Hub access on all platforms, Facebook, Instagram, and LinkedIn.
Perfect. And pay attention, folks. Like Benji said, don't get stagnant. I think this is a big opportunity for building culture and also for innovating and kind of learning what you can get through. We never had this happen before, so the financial crisis was kind of different. Everything didn't shut down, so this is a new kind of crisis for us.
It's obviously companies are sensitive to it, right? So it's a good time, or it could be.
Yeah, definitely. We appreciate you guys dealing with the tech challenge. Team replay, share it. Everybody that's been on, share it, please. And we'll catch you later on today at 4 with Santia Deck.
I'll be back
talking about some motivational stuff. Yeah, I'm excited about having her on. So those of you watching now, Santia will be on 4 o'clock today. Thank you much.
Thanks, Dale.
Thanks.